I think in the next 12 months, something over 100,000, maybe 150,000. And, in the next 5 years, again, there's a finite supply, and now we have a potentially huge increase in demand with a spot Bitcoin approval. So I think in 5 years, something around 500,000 would be potentially achievable.
Shut it down if you were in government. Can you give us more clarity on that?
Yeah, what I was also pointing out is that the actual use cases are sex trafficking, tax avoidance, anti-money laundering, terrorism financing. It's not people just buying and selling Bitcoin.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And we had Tom Lee on CNBC stating that Bitcoin get 100,000 to 150 in 12 months. But guys, the only thing we have to do is follow the Fed, if that is possible. And then he said in 5 years, Bitcoin could hit 500,000. Do I think that could happen? No, I do not. Guys, remember in 5 years, we'll be fully into hyper-deflation. And remember, the Crypto Teacher told you. And we have Jamie Dimon sticking to Bitcoin is still for criminals, even though he's a participant of BlackRock Spot Bitcoin ETF. You can't make this stuff up. And then we have Jamie Dimon on the economy. Guys, now that we have the Spot Bitcoin ETF approved, it is going to help stabilize Bitcoin's price. That means a lot of the volatility is going to be taken away. We have to watch which one of these ETFs are going to allow us to see how much Bitcoin they actually have. But don't forget, tomorrow we have CBOE launching their Bitcoin and Ethereum futures. But remember, guys, futures, they're just betting on the price. So at the end of this month, we're definitely going to have a big pullback. And remember, the Crypto Teacher told you. But again, guys, Jamie Dimon is speaking about the economy. We know Bitcoin. We know about stocks. We know about making money. But guys, we have to get back focused on the fourth industrial revolution. Because remember, Bitcoin, crypto, all these robots, algorithms, and drones is to replace humanity in the workforce. And we have Jamie Dimon says the consumer is in good shape. But, he said, with the C word, the money is running out. Guys, that money been ran out. He's acting like each American received 100,000, while we're seeing credit card debt over $1 trillion. We see car payments behind, home rental payments behind, and we know the consumer savings account is empty. 65% of the Americans are living paycheck to paycheck. And he asked, are we going to have a recession this year? And guys, I already proved last year we were already in a Great Depression. We already know that we're in a recession. And we're seeing corporations steady laying off. And we know that's going to pick up in 2024. And then he asked about the Basel Committee 3. And we know when it comes to these banks, these small and medium-sized banks, they're going to collapse. And of course, that's the reason why they're keeping crypto, all these coins running, because they're going to blame crypto for the banking collapse. We've seen this movie before. Remember, guys, all these distractions that are going on is for the fourth industrial revolution. Yes, the Spot Bitcoin ETF has been approved, but if you pay attention to the media, they've already moved over to the next story, and you need to move on to the next strategy to make sure you're taken care of over these next 5 years. Because, guys, you're definitely living a movie. Remember, your life is an illusion and TV is your reality. And you're witnessing the fall of America to Babylon, along with the fall of the American reserve currency and the rise of China, along with the BRICS nations, with that digital yuan backed by that digital SDR running the Belt and Road. And remember, the Crypto Teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
This credit spreads being very,
very narrow. So the good news is the consumer has jobs, wages are going up finally more at the lower end, home prices are up, which is good for their balance sheet. Credit is normalizing, but it's still lower. Stock prices are up. Consumers in good shape. But the extra money that they got during COVID, trillions of dollars, that's kind of running out. And looks to us like it's going to run out sometime. It's been pushed out and out for a whole bunch of different reasons, but it runs out this year. The government has a huge deficit, which will affect the markets. But I'm a little skeptical in this kind of Goldilocks kind of scenario. I still think the chance of it not being a soft landing are higher than other people. That's not terrible. It might be a mild recession or heavy recession. Obviously, all of us in business have to know how to deal with, the ups and downs of vicissitudes of the economy. But I do think the cross currents are pretty high. The money running out, rates are high. QT hasn't happened yet. QT may bite. I expect it to, by the way, that you'll see more volatility, particularly unwanted in treasury markets because of QT.
So are we going to see that recession this year?
Yeah, it's a possibility. I think they did the right thing to raise rates. I think it was a little late, and I think they're doing the right thing just to wait and see what happens. And as you said, it takes a while to see the full effect of that. And there are other financial conditions out there, but all of those factors may very well push us to a recession, and as opposed to a soft landing. But the other thing we have to mention, the cross currents I'm talking about, it's not just the fiscal spending, QT, what's happening to the COVID money. It's also what the geopolitical situation is. You can't look at what's going on in Ukraine, the heartbreaking humanitarian crisis, the potential, it's gone on now for almost 2 years, and of course the terrorist activities in Israel. Now you have a widening war in the Middle East. These things which affect, and all these things affect oil, gas, food, migration, all economic relationships around the world, economic, military alliances. I put the geopolitical stuff as something you can't look at this year and say that it will not have effect. It may very well. That stuff is about the freedom of the Western world for the next 100 years. So I'm not comparing that really to the economy this year. And so, for JP Morgan, we're going to serve our clients in 2024, 2025, whatever the environment brings. We always say that we don't know what the environment's going to be. Look at the range of outcomes. Can we handle them? And, the answer is yes. That because of fiscal spending and other factors, and let me list them for you for a second. I look at a lot of things, and forget just economic miles for a second. $2 trillion of fiscal deficit, the infrastructure and IRA Act, the green economy, the remilitarization of the world, the restructuring of trade are all inflationary. And that looks a little bit more like the 1970s to me. So I think there's a chance that people should be prepared for that inflation comes down, but then bounce around 3, maybe even bounced up a little bit, and those implied curves will change. And then, are people ready for that? I'm not sure. But, I just give that a higher chance than other people give it. For you all to see and read, if you're willing to, the hundreds of pages of comments that are very specific about operational risk capital. These capital costs will be embedded in everything. And some people have said to me, well, big corporations can afford it. No, but big corporations will also pass it on to their customers. So it will be passed on in a million different ways. What bothers me the most is no one ever looked at it and said, here's the outcome of these changes. And we want these outcomes. The outcome should be what you want. So, the mortgage business is leaving banking, a lot of credits leaving banking. And if that's what the regulators want, so be it. But I do have other serious concerns with this thing. We'd have to hold 30% more capital in the U.S. than competitors, foreign competitors in the U.S. I don't think that's appropriate. I have strong objections to it. I think the work was poorly done.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, It's Time to Re-Educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, So therefore, we can start the re-education now. Because as we see, the fourth industrial revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.